welcome to Overdue Talks. My name is Harry Van Sheek, and I'm Regional Editor for Oxford Business Group. Now, over recent months, we have been conducting a special CEO survey with business leaders across Egypt to gauge their opinions, insights, and expectations on the Egyptian economy's current and future states. Now, while these results are available to access for free on our own terminal, today I'm here to explore their findings with two key executives. Tariq Madani is Managing Director of tech firm Global Appraisal Tech, and Ahmed Shalabi is President and CEO of real estate firm Tatwin Nisa. Welcome both.
Thank you, Harry.
Thank you.
Now, Tariq, nearly 4 out of 5 companies in our survey are expected to be operating at over 61% capacity during the first quarter of 2021, and just under half of these at full capacity. How would you evaluate the rebound that we're going to see in Egypt in 2021?
Thank you for the question. When you look into the details of the survey, you will notice that most of the businesses are very optimistic about 2021, particularly because of the COVID-19 vaccination that's coming out, in addition to the actual policies in Egypt in actually applying social distancing and masks. Obviously, cases in Egypt are rising, but people don't seem to be faced too much by that. Businesses are not, because of digitalization. And you will see that the majority of the people who are not optimistic are typically in the tourism sector or in the businesses, travel sector. Those are the ones who would have been most affected. Besides that, the Egyptian government has introduced a lot of measures that boost the economy, particularly, for example, shaving 300 basis points from the interest rate, adding new loans, very low interest loans. It has actually boosted the economy. It has made 2020, despite the COVID-19, there was a small disruption in March, April, May, but the economy rebounded unexpectedly, and people have seen actually even over 100% capacity and even revenues that beat last year's revenue in terms of in the construction sector or the services sector, or anything that has to do with IT, digitalization, services, outsourcing services. Egypt is famous for a destination of outsourcing from Europe and the US. So we saw a lot of that sort of business coming into Egypt, exporting services, exporting real estate and trade and manufacturing, etc. That situation is not as happy for the tourism, as I said, and the travel sector. They are still suffering. Restaurant businesses, some retail sections that depended on things like shisha and smoking and things like that, but these things have been banned. But other restaurants, business, for instance, that depend on food, on good food, good entertainment, etc. They maintain the social distancing, the low capacity or the social distancing rules very, very well. I was in a restaurant yesterday with waiting lines over an hour, 2 hours, and that seems to be a huge appetite from Egyptians for internal tourism. Internal tourism is on a rise, for entertainment, for restaurant chains, and so forth. So overall, I think the economy is very strong. It's stronger than expected. I wouldn't say it's as strong, but it's definitely stronger than expected. With a lot of people less pessimistic than they were a year ago.
Now, Ahmed, bank loans, particularly those in local currency, seem to be the most popular source of capex financing, according to our respondents. So how would you evaluate the relationship between financing and the construction and real estate sector this year?
So I think what happened in the year 2020 and this year, that banks reduced their interest rate by 400 points. It's 4% since mid-2019 till now. And this is huge. This is a big difference. I think now we are talking about lending and borrowing at 8.25 and 9.25, which is very, very, very attractive to the local market in Egypt. That's in general. But when we talk about the real estate sector, you will find something interesting, that for a long time, the real estate sector was classified as a high-risk sector. and there were many regulations regulating the lending to the real estate sector from the Central Bank of Egypt. Lately, these regulations were a little bit easier, and I think the relationship is growing fast and fast between the lenders and the banking system and the real estate sector. Lately, the Central Bank of Egypt issued an adjustment to some of the regulation that allowed the companies to use some of the money through the loans to pay land installments. And this is really important because at this period of time, when we talk about construction costs and land costs, it's becoming too much in the last few years. And this is a huge burden on the cash flow of the real estate companies. So now the central bank is allowing the real estate companies to ease this burden through their loans and use part of the loan to pay land installments. This will help the real estate companies to expedite their cash flow process, expedite the construction, respect the delivery dates, and most importantly, be able to expand in new projects. There is one factor that we shouldn't ignore, that in Egypt in general, the banking sector had the lowest loan to deposit ratios among emerging countries. It's 45.9% on March 2020. This is compared to 80 and 90% globally, which means there is a huge room, huge liquidity in the banking sector, and there is a room for more financing for the industry in general. I think real estate will hold an important position in the relationship with the banking sector in Egypt in the coming few years, since there is a need in the real estate companies and there is availability in the banks, and there are the regulations of the Central Bank of Egypt that will ease this process. So I think the triangle of the relationship, which is the lending parties, banks, and the Central Bank of Egypt and the real estate company, the triangle is ready. And I think we will see huge amount of money flooding from the banks into the real estate sector in the coming few years. And this is, I think this is totally normal because this is the most expanding industry in the country. We are now 22% of the GDP, real estate and construction, which is huge. So the banks cannot ignore this huge industry. And I think we will see a lot of money coming into the real estate industry in the coming few years.
Now, Tariq, over 70% of firms surveyed by Oxford Business Group said they significantly or very significantly relied on digitalisation to continue operating during the pandemic. What trajectory does this establish for Egypt in 2021 in terms of digitalisation?
The pandemic has, in my opinion, catapulted Egypt 10 years ahead. I mean, Egypt, in terms of digitalization, was very behind in terms of the world standard. It has forced people to come up with new methods and processes of working from home and remotely. The infrastructure, we're very lucky that the ICT infrastructure or the communication infrastructure in Egypt has improved a lot. Just coincidentally, before 2020, we're seeing fiber optic networks, infrastructure has put in place. Obviously, in the onset of the COVID-19, the government has actually put even more effort and more money into accelerating the infrastructure because of the circumstances that we're in. And that has actually proven to be very successful. Now we're seeing a lot of companies working from home, a lot more susceptibility to agreeing to do Zoom meetings or Microsoft Teams meetings, etc. People are comfortable. People were not very, they weren't sure that working online would have actually resulted in a productivity, but it turns out that productivity was not that much affected. Even we've seen a massive move from typical face-to-face and physical interaction to online interaction, which I think a lot of it will remain permanent. A lot of the companies are actually thinking long-term plans to scale down their physical interaction. Meetings have actually completely been eliminated face-to-face, and I think they will remain as such. banks, etc. Everyone almost is very comfortable now working online.
Now, Ahmed, the general consensus from respondents to our survey is that Egypt's economic trajectory will continue to depend equally on international and on domestic factors. What is your view on this matter, especially considering that Egypt is one of the strongest and most dynamic economies in the world at the moment, but also considering that trade still accounts for around about 50% of its GDP?
From my perspective, I believe that the domestic factors will play a more important role. We have seen 3.6% growth in the GDP in 2019, 2020 compared to the 2% that were projected by the IMF. Egypt achieved 3.6. This is huge, and given the circumstances, the all over circumstances that happened during COVID-19 in the last year, I think mostly of this growth is related to international, local infrastructure projects and local construction projects. We all have seen the decline in the tourism indicators. All the tourism indicators around the world are just declining. Foreign direct investments are declining. Even Egypt is still the top in Africa, but we have a 39% decline in foreign direct investment that were estimated at 5.5 billion. So there is a decline in the foreign direct investment inflows in Egypt. There is a decline in the tourism. There is a decline in the income coming from Suez Canal. So I think most of the international factors are not helping that much. I believe that the growth that is happening in Egypt is mostly related to domestic factors. We have a strong population base, over than 100 million. And this strong population base is the engine behind the economy and behind the strength of the economy. So I think that 2021 will still continue with the same with the same attitude in the economy, when we're gonna see that the domestic factors are pushing the economy hard. The infrastructure projects, the new cities projects, all what is happening in the country internally and domestically will help the country keep the positive growth in the GDP. And I think, as you said, as you mentioned earlier, Egypt is one of few countries around the world who kept the positive growth in the GDP. So I believe it's the domestic factors more than the international factors.
Tarek, Ahmed, thank you for your insights. Thank you for your time. It's been a pleasure.
My pleasure. Thank you.
Appreciate it. Thank you so much.